Hi, if you're new, welcome to my channel, and my channel is all about making lucrative investments that anyone in the world can make. And today I'm going to dive into a company called ABBVIE, which is a really big biopharmaceutical company that's based in America, but they have products all over the world. And if you haven't watched my videos on Amazon and Facebook yet, maybe go back and watch those because I go through a lot more detailed financial analysis and explaining all the terminology that I'll be using today. Oh, and also in those videos, I will show you how I use the online calculator in a lot more detail. Today, I'll just go through it nice and quickly. Today, we're going to work out all the risks associated with the company ABBVIE and hopefully try to find its fair value. We'll look through ABBVIE's debt ratios, book value, earnings, cash flow, dividend, return on equity, and finally, the stock price. I think my strategy is quite simple, but very thorough, and I've taken the best bits of Benjamin Graham, Warren Buffett, Bill Ackman, and John Bogle, and combined them all together to do my strategy. Before we go into the financials of the company, what we really need to do is decide and predict whether we think the company will still be going strong in 20 years' time. This is really hard to do accurately, and I'm not a psychic, but I think some industries are better suited for the long term than other industries. So let's try to decide if ABBVIE is going to be going strong in 20 years' time. Now, what I've done is just general research. All I've really done was read analysts' opinion and just read some articles online for maybe 1 or 2 hours to just get a general feel of what's happening. Maybe you haven't even heard of ABBVIE before. So ABBVIE is a giant drug research and development company that have some of the most important drugs in the world. ABBVIE is best known for a drug called Humira. And this drug is one of the best-selling drugs in the world. It's really a billion-dollar product just on its own. And if you haven't heard of it before, well, you're really lucky because it means you haven't spent a lot of time in hospital. It is an anti-inflammatory drug that is used for really serious situations like Crohn's disease and rheumatoid arthritis. Imbrovica, which is their second most successful drug, is used to treat leukemia and lymphoma. So we're not talking about just cough medicine here. This is really serious business. So I think it'll be their ability to research and develop new drugs that will be most important for the next 20 years. In the research and development game, if you develop a new drug that is unique, well then you get a patent on that drug, which means that you're the only person who can sell that. So if it's a really important drug and you're the only company that can sell this drug, this is going to be very lucrative for your company. But because of this, the industry receives a lot of criticism. See, the biggest criticism of drug manufacturers of specialty and important drugs is they charge really high prices for their patent-protected drugs. A standard prescription of Humira costs the patient around $5,200. This is very expensive, and for the people who really need the drugs, well, the treatment can lead them to bankruptcy. But on the other hand, it costs billions of dollars just to do the research and development to get this drug on the market. So the company not only needs to make a profit, but they need to make enough money so that they can fund the next research and development of potential cures. I think it's actually a bit of an ethical dilemma. So without the incentive for these companies to make a lot of money, then they're not going to put the money into the research and development of cures of diseases. But with the patent protecting their product, they can charge whatever price they like without any competition. One concern I have with the drug Humira is that the patent is going to expire in 2023, and currently it makes up 61% of ABBVIE's revenue. So when that patent expires, it will mean that cheaper manufacturers can come into the market and offer the exact same product at a far cheaper price. ABBVIE does have some very promising drugs in the pipeline. They have a potential cure for psoriasis and an improved drug for rheumatoid arthritis as well. And also in really big news, ABBVIE actually acquired the company Allergan, which has the patent on Botox. Botox being where people put injections in their face to get rid of wrinkles. And this acquisition looks set to make ABBVIE a lot of revenue in the future. The government also has been threatening to intervene in the industry for quite some time now as well. They've been trying to reduce the lengths of patents and also put price controls over necessary drugs, just like Humira. So do I think ABBVIE will be going strong in 20 years' time? Honestly, my gut feel is that it's just a little bit too risky. Yes, they make big money. Yes, the industry is growing, but I don't know what I think of the ethical dilemma. And it's not just ABBVIE. The whole industry is charging extreme amounts of prices for very important drugs. And unfortunately, at times, bankrupting the people that will die without the treatment. And because I have a 20-year time frame, that gives a lot of time for governments to come in and intervene in the industry. So I do think the chances are really high that the industry is going to change dramatically in the next 20 years. So because of this, I just think it's just too difficult to predict. So now after doing this preliminary research, I'm probably 90% sure that I'm going to pass on this investment. I do want to quickly go through their financials just in case they surprise me, because if they're like crushing their financial statements, then I guess I'll have have to go back and do a lot more research and dig a lot deeper into the industry and the company in particular, just in case I can see that maybe there is potential for them to be strong in 20 years' time. At the moment, I've really just done preliminary research just to get a feel of what's happening in the industry and the market and with the company itself. Now, you might also have a very different outlook on this industry and this company than me. I spent about 2 hours just reading what analysts think and reading the recent news of the company to get my opinion. But in the end, I just make my own opinion. See, this is where I think you can get an edge. If you knew an industry or a specific company really well, then with the better information that you have, you might be able to formulate a better opinion as well. And because you have this better information, you might be able to form a far different opinion than mine. So it's a big reason why I still want to go through the financials of the company, because maybe I'm missing something. So let's quickly go see. And if you have any questions about the ratios or any of the financial information that I'm about to provide, I explain it in far better detail in the Facebook and Amazon videos that I've made previously. I just don't want to keep repeating myself for every company that I look at, so I'll just be going through it quite quickly today. Now, first up is the debt to equity ratio, and I'm wanting it to be under 0.7. And for ABBVIE, it's minus 8.1. Well, negative 8.1 is under 0.7, but a negative number, that's something actually that's really bad and I don't get to see very often. The way to get a negative number here is that equity must be negative, which means that if equity is negative, they must be losing value. I actually had to dig a little bit deeper and to find out what was actually happening here, and it looks like it coincides with the purchase of Allergan, remember the Botox company? We'll have to see if they can dig themselves out of this negative equity situation, so we'll keep going through the financials. The current ratio. I want at least above a 1.2 here, and ABBVIE is 3.1, so this is great. Let's keep going. Next, we look at the book value per share over 10 years, and I'm looking for growth here. Now, this graph makes sense from ABBVIE as they just spent all of their money and more to buy Allergan. Now, this was a huge takeover, and it looks like they made a big bet with this company, Allergan. So although I'm pretty confident why the graph looks like this, I still don't like it. Next is the debt to equity ratio over a 10-year period. Now, normally I would show a graph here, but because of the negative equity situation, this graph is going to be totally messed up. So there's no real point even showing you this graph. It's totally messed up. It's going to be really bad. And let's just move on to the next piece of data. Now we need to look at the earnings per share over 10 years. And the earnings per share will tell us how much money they are making. I'm looking for a stable, growing graph here. Besides 2014, it's pretty solid from ABBVIE. The company is growing really well. Next up, we look at the cash from operating activities, and we must see this growing. And this graph from ABBVIE is actually very interesting. It appears as though, although they have gone into debt and spent all of their money buying Allergan, as we notice in the debt to equity ratio, it appears to have immediately started making great cash flow from this acquisition. Now let's see if they're investing at least half of the cash into investing activities. I'm wanting to see about half of the cash generated to be put into some sort of investing activities. As you can see, it is all over the place. This also makes sense because they spend so much money on buying Allergan that this was the investment that the company made rather than expanding and investing in themselves. I'll give this across, but I think it's really important to understand why. Now we look at the very important return on equity. Normally I want to see this above 10% and consistent, but I think we can predict this is going to look ugly because they have negative equity at the moment. And I think we can assume this is because they spent everything on that acquisition. ABBVIE is paying a dividend and it is currently at $4.72, which is around about a yield of 6%. But they just spent all of this money on this acquisition and I don't think this dividend is going to be sustainable at all. They spent all their money. What are they going to possibly pay the dividend with? Their payout ratio at the moment is really high at 83%. That means they will need to spend 83% of their earnings to cover the dividend. Now that's unlikely since they have to pay off all of their debt. So I'm not sure whether to give this a tick or a cross, but I guess because they are paying a dividend, we should give them a tick. I'm just not very confident it's going to be sustainable. Lastly, we look at the price to book value. I want this to be close to 1. 3 would be quite high. This will tell us if the company is trading near book value. ABBVIE is currently negative 14. Now this is screwed up because of the negative equity. If the company had to completely stop right now, well, technically, the company would be worthless. Okay, I think we can finally stop now. So the big issue here is that they've taken such a big bet out on acquiring Allergan. Now the bet might actually pay off for the shareholders because they have such a strong earnings per share. If they keep having this good earnings per share into the future, they'll be able to repay their debt and get that equity number back up a lot higher. But I'm not going to take that gamble. I don't need to. I'm going to try to find something a lot better and a lot more guaranteed. But if you were interested, I did run the numbers through the Intrinsic calculator. This is a great example as to why you can't just go straight to the calculator before actually going through the above criteria. According to the calculator, it's not far away from a good price. But just because it might get to be a good price doesn't mean we should actually buy it. The calculator only really helps us find a good price to buy. Nothing more. It doesn't tell us if the company is actually worth buying. So I have a confession to make. I was actually really looking forward to investigating ABBVIE. I saw the really high dividend and I read about their new life-saving drugs that they're developing. But this is a really good example of why it's so important to dive into the actual financials of the business and do your research before making any sort of investment. 5 years ago, I probably would have invested in a company like this, because it has really good new products coming out, it has a really strong dividend, it's making a lot of money, and it's in an industry that I think is growing and going to be important in the future. But I have learned not to get enticed into a story that I read. I must do my own research, formulate my own opinion, and do my own financial analysis. And only then will I be confident to invest in a company at the right price. So ABBVIE as an investment. If you like that graphic, please give the video a like. What would you like me to analyze next? Be sure to subscribe to see my next analysis, and I'll see you in that next video.